Hi everyone, today we're going to speak about the 2025 housing market and what I've seen as a loan officer in this market and how you can take advantage of seller credits, lowered purchase price, and negotiating with the seller credits towards maybe buying down your interest rate. Hi everybody, my name is Herman Ramirez. I'm a loan officer in Arizona, Texas, California, Florida, and newly licensed in Oregon. I'm expanding my licenses to more states to be able to help more buyers. However, today we're focusing on what's changed in this year's housing market and what I have seen in my market, which is San Diego, California, that might be affecting other markets of California. Number one, insurance policies. One of the biggest changes right now to the housing market is a lot of insurance carriers have been moving out of state because of the fires, because of the floods, and because they rather have less liability covering a property that might have high possibilities of burning or flooding. Now, the second thing we're seeing in this market is that a lot of home sellers are starting to list their house because they've now outgrown their property. What does that mean? Well, why couldn't they have done this last year, you might ask, right? It's because a lot of buyers were waiting for interest rates to drop. Now, I'm not saying that 2025 interest rates have dropped a ton, but they have steadily been coming down. The same way that they've come down, they came back up, and you can tell that the market right now, with the whole Trump tariffs thing and the 90-day extension, there's just a lot of uncertainty that has interest rates going up and down daily. It's a very volatile market. It is not something you want to play with. If you get your offer accepted, it's something where I would advise to lock your interest rate right away, because the same way that you can get a good interest rate one day, the same thing the next day your interest rate goes up a quarter, a half a point. It's volatile to say the least. Now, the third thing is sellers are starting to get desperate. Why do I say this? Because I'm looking on Zillow and I'm also looking at homes. I'm looking at Redfin, and a lot of properties you see price reductions. Why? Because this time around last year there wasn't as much supply, right? There wasn't enough properties in the market. So now that sellers are outgrown their house, decided they want a bigger home, want to downsize, they're selling their property all at the same time. And what that means is now, since there's more supply, the demand for buyers, because interest rates is volatility, has kind of slowed down, right? There's more buyers willing to wait, and there's more sellers willing to sell. So that means that a lot of sellers are having to now negotiate, giving the new buyer a seller credit, negotiate maybe longer terms on the close of escrow, negotiate to help them pay their insurance for their title for the first year, right? Sellers are now trying to give more to the buyer so that the buyer has more of an enticement, or give them more reason to move forward with buying their property. Now, the fourth thing that I've seen, appraisals are not coming in above, and sometimes appraisals are coming in lower than we expect. Now, why is that important? Because there's clients that want to refinance and there's clients who are purchasing a home. Now, when a property does not appraise for the value that they're buying the home, us, the lender, the investor, we're not going to lend up to the value you purchased the house. If the appraisal comes in lower, whatever that gap is, you need to come in out of pocket, or we must now go back to the negotiation table with the seller and bring down the purchase price. That is huge right now, because the market we see right now is not a super competitive market. There is a lot of good deals that buyers can get if they did jump into the market right now. And we're just about to get to summer, which is typically the best market for sellers to get higher, amount for their home, and for buyers to put themselves in a bidding war. Summer, typically you see more teachers, you see more business owners taking time off with their kids. It's just a lot more time to shop around for houses. Summertime, you got the kids, you have more leverage of what you're gonna do, right? So shopping begins. With that being said, the market during summer will pick up. So if you're looking to buy a home in 2025, right now we are in a perfect situation for you to get a good deal. Right now it's April. It's a great time for first time home buyers to take advantage of sellers willing to give credit and just get in with whatever interest rate is right now as long as you can afford the payment. Don't forget, you can refinance down the line. However, this price right now that we're seeing a little bit of price cuts means that your value in your home has more potential for equity because you're now buying a property from a seller who's willing to sell for less than what they initially wanted for their home. Meaning you might be walking into some equity or you might be buying a property that is appraising at value, right? Meaning it's worth what you're paying. Um, One of the other things I wanted to speak about is FHA, right? I believe this is the fifth thing on the update for 2025 housing market. FHA has now officially walked into a new guideline where DACA, right? DACA residents will not be able to qualify using an FHA loan anymore, which really sucks, right? It's terrible news because now they aren't going to be able to afford buying a house with the 3.5% down and the much lower interest rates than your typical conventional rates. Um, that's bad news. I know it is. However, that's where you look for a lender who can get creative to ask the seller to get you a seller credit to buy down your interest rate, to find a lender who's willing to take a lower down payment, right? Just team up with a good team, a realtor, a good lender who's gonna really put everything in your best hands, right? Not, putting an offer 30,000 so that you get 30,000 to cover your closing costs, but then now you're paying over 30,000, it might not even appraise, and now you got to go back to the negotiation table, or you just lost money on your appraisal, your inspection, a lot of chaos. This is your 2025 housing market. I am a loan officer here in San Diego, California. However, like I mentioned earlier, I'm licensed in Oregon, California, Florida, Texas, and Arizona. Okay? If you guys have any questions, anything, just leave a comment down below, a like, a subscribe, and a share to this video would help me grow my page. Would love to do more content for you guys. Peace out.